So first of all, what we're going to talk about is support resistance zones, right? Support resistance zones, they're basically a support. It's the level on the chart where candles are most likely to reverse after dropping. You know, usually a bullish candle on the 30-minute time frame or higher after a bearish candle can signify formation of a support. You know, so whenever you have candles moving bearish and you're looking at the 30-minute time frame or higher, if you see a bullish candle forming after that, that's a support formed. This is really, really important to understand. You know, when you're looking at supports, I hope guys are making notes. If you're looking at supports and if price is moving bullish, you know, and when you have a retracement, you need a support formed, which is going to be a bullish candle forming after a bearish candle, which will signify a support has been formed. In the same way, when you have resistance, it's a level on the chart where candles are most likely to reverse after moving up. When price is moving bullish, it's going to encounter some sort of a resistance and the candles will be bullish candles. So you need to see a bearish candle forming after the bullish candle on the 30-minute time frame or higher to signify that, okay, now a resistance has been formed, right? This is a very simple concept. Now, when you're talking about zones, all support resistance zones are just zones. You know, it's never a specific price. It's always a collection of prices. So whenever you sometimes, so back in the day when we started, we used to draw lines as support resistance. And when we used to draw lines, we'd say, okay, well, let's say if you're looking at price at 100, someone would say, oh, my support is at 100. How come your support is at 102? You know, so what we realized that those support resistances are just range of prices. They're just collection of prices. So that's why we just signify them based on candles. So let's say, for example, now we have range, right? What's a range? Range is the distance between two zones, support and resistance. The bigger the range, easier it is to execute a profitable trade. So what I mean by that is, let's say you have a resistance and you have support, right? These are very basic concepts, and these are the exact things I use to execute trades. No problem on the higher time frames, the 4-hour, daily. This past week, I executed a trade on the daily on GJ, on the lower time frames as well. They always work. So let's say you have a support and you have resistance, and you have a candle, bearish candles that are coming down, right? You have a bearish candle coming down to a support, and then you have a candle closing bullish. When you have a candle closing bullish, now you're like, okay, well, if a candle's closing bullish over here, maybe this is a formation of a support, right? If this is the formation of a support, you need to look at two things. Number one thing is going to be your stop loss. So your stop is going to be somewhere down over here. And the number two thing is what you're going to look at is that if you're going to take a buy, do you have enough range, right? Do you have enough range here? So you have to measure this range. You have to measure this distance. So if you're going to take a buy, you're expecting price to continue moving bullish to the next zone. So you need to see how far is that zone. You know, is there enough pips to that zone? So if you measure and this turns out to be 20 pips, someone can say, well, you know, it's only 20 pips and I don't think it's enough. I don't think it's enough range for me to trade. Because if you take a buy, let's say if you take a buy down over here, or no, actually, let's say if you take a buy over here and you expect the next candle to go up, now you maybe have a 15 pip range, you know, so you can maybe get like 8 pips out of it. You know, so it becomes very risky to trade in a smaller range. You know, this is why it's always important to measure how big is your range, how much distance you have. Let's say, for example, that instead of 20, this is a 40 pip range, right? If you have a 40 pip range, now it becomes much more easier for you to say that, okay, if I take a buy, there's a very high chance I can maybe get 15 to 20 pips. Because it's not important that price will go all the way up to the zone. It might go halfway through and then start coming down and start ranging or whatever. So you need to be really cognizant of the fact that, okay, how big is my range? If it's a 40 pip range, you can easily get 20 pips out of it, 15 pips out of it, and let the rest run. If you're looking on the daily, on the 4 hour, and if your range is, let's say, 100 pips, then you can say, okay, well, in this 100 pip range, I can basically get maybe 50 pips out of it, 60 pips out of it, but not the whole move. You'd want to let a runner running, right? Which means you will need to leave a position at break even to see if it does continue that way, right? So that's support resistance is just based on the fact that, okay, if you do see a support formed, how are you looking to see that price is going to continue to go up? Or if you see a resistance formed and you have candles closing bearish at resistance, how big is the range here? How much room do we have for price to come down? If it's a bigger range, then then the candles are going to have a much easier time going bearish. But if the range is smaller, then it's going to get very hard. So you have to really choose your battles. And the way to say, you need to put yourself in the best position to win. Ted used to say this all the time, and the best position to win is to wait for price to come up to a resistance and print a candle in your direction, or wait for price to come back down to a support and wait for a candle to print in your direction. Then you're going to have a much better chance of winning the trade. This is really important. A lot of people, they don't wait. They take sells when candles are bullish. Let's say if a candle is moving bullish like this, at resistance, they will try to take sells, anticipating it to go down. You can't take a sell at this point because candle is bullish, man. You have to wait for a candle to flip bearish in your direction and then take a sell. This is like, couldn't this be seen as trading in consolidation? Yeah, but we're talking about, this is a very generic example. I'm giving very generic examples for means of understanding, right? So this is like saying, if you're standing at a bus stop and you want to go left and all the buses are going right, are you going to get on the bus that goes right, anticipating that it might go left? No. You're going to wait for a bus that goes left, and then you're going to get on that bus, and then there's going to be a higher chance for the bus to go left. Just like if you have a candle closing bearish, then you're going to know that, okay, if the candle has closed bearish at resistance, there's a higher chance for the candle to continue going bearish. Resistances are more likely to get broken in an uptrend than in a downtrend. Support are most likely to get broken in downtrend. Yes, that's correct. A 40 pip range can easily give you 10 pip move. Yes, that's also very correct. Okay, perfect. Let's keep moving on over here. So let me just remove all these. So also, if you have some questions, just wait for your questions till the end of the presentation here. When it approaches support resistance, shall we wait for 15-minute or the 30-minute? Okay. Basit, someone asked this question. It just seems to me someone hasn't been taking their notes properly. We've talked about how the 15-minute is a weak confirmation time frame. We've talked about how the 30-minute is closing. That will give you a much better confirmation for price to move. This is why, guys, listen, take notes. Take notes, and before asking questions, look at your notes. Because when you ask questions on the fly, your questions are going to be answered in your notes. Trust me, I've built this presentation in a way to answer all your questions. All right, so let's continue on towards identifying support resistance. So basically, most recent rejection areas will be regarded as the most probable zones, right? These areas are also called fresh zones. These are zones where price reached and had a reaction to it. What this basically means is, now let's say when we're looking at this chart, right? For example, let's say that we don't have access to all this information here, right? We don't have access to this information here. And when we're looking at price in this level, we see that there's some sort of a resistance form. So now someone can ask me, okay, well, how are you able to draw a resistance? How would you know where to draw resistance? So the best way to draw resistance would be based on the wicks, right? Maybe like you're taking into account like the average length of these wicks, and then you're drawing a zone. You're like, okay, you're looking at, once you see that these candles are respecting this area, you look left and you see that all the other candles were also respecting this area. Now, drawing a zone like this comes with practice. The more you look at the charts, the more you draw zones on your charts and you post them in the chat, the better you're going to get. Because what's going to happen? You're going to get feedback. So I don't expect anyone who is new here to get these zones right off the bat. I don't expect that at all. I expect you to mess up. I expect you to have bad chart analysis. I expect you to draw bad zones. And over time, together, we're going to get better at the zones. And ultimately, then we're going to start executing and having profitable trades. So just take your time. Now, fresh zones are basically zones which have been recently rejected, right? So this example was just to show you how you can have, like, a resistance here. Let me just get the other one. So yeah, so you have a resistance here, and then price came down. It formed a support right over here, and then price continued to go up. And since price was continuing to go up, we had this candle that moved with volume. There was a lot of volume in this candle. It moved up, and it encountered. So when candles are looking left, it looked left, and it saw that, okay, there was a resistance up over here too. So it kind of reacted to this resistance, and then it continued to come down. So look at how the candles are closing. So this one candle, this closed bullish above this resistance. Then we expected this continue to go up, but it went bearish. Maybe it went bearish because it saw a resistance here to the left-hand side. So it went bearish, and then we formed a bunch of, we formed more resistances here, which price started to respect, and then eventually, price started to range here. If a zone is formed above a resistance or below a support, does that make you hesitate on entering? That makes no sense. I mean, that makes no sense if a zone is formed. I just don't understand. Because support resistances are a zone. So let's say if you have this resistance zone and you have this support zone, and now what you're doing is you're basically eyeing the fact that, okay, once we have these two zones, where is price most likely to go? If price breaks this support, where is price most likely to go? So you look left and you're like, okay, well, maybe price may continue down to this support. Or if price breaks above this resistance, then maybe price may go up to this resistance, right? So whenever you're looking at the chart and whenever you're plotting out your charts, you're plotting out, please make a note of this, you're plotting the most recent support and resistance zones, right? Once you have those plotted, then you're plotting out that, okay, where's price most likely to go if it breaks up? And where's price most likely to go if it breaks down? That's it. And then you're waiting for candles to, maybe break up. If you have a bullish candle forming, in this area right over here, then you know that, let me just get my bullish candle. Let's say if you have a bullish candle forming right over here, and you're like, okay, if this is a 30-minute time frame, or if this is a 1-hour time frame, then this basically means is that now this is a higher confirmation time frame, right? So you're drawing these zones based on the 1 hour, maybe the 30-minute, right? Sometimes the 30-minute, not on the 15-minute. 15-minute is a weak confirmation time frame. 15-minute is not going to work all the time. If you want things to work, you have to excuse me guys, I'm having a little bit of a language barrier. Perks of being an immigrant. Yeah, so you have to focus on the 30-minute and the 1 hour, because those are higher confirmation time frames. So when you have a candle closing above here, then you know that, okay, now there's a higher probability for the next candles to continue going up. Or let's say if the next candles don't go up, then you might say that, okay, if we do start to go up a little bit, then there might be a probability that we might get candles coming down over here. And when candles are coming down and you're looking for buys, you're looking to see if candles are going to close in your direction. You're looking to see if you get something candle forming like this, which now becomes a support. And now you can see, okay, since we have a support formed, there's a very high chance next candle can continue moving bullish, right? So this is what you're doing on the 30-minute time frame. As you start to do this more and more, you will start to understand that, okay, this also makes sense on the 15-minute as well, but that's a far-fetched idea. That comes with experience. Dynamic risk comes with experience. Executing on 15-minute candles also comes with experience. So if you're a new trader, I would focus on the 30-minute, the 1 hour, and that's it. And I promise you this will continue to work. Okay, so is there a certain time during the day where we can straight execute when we get a break and close above level? Yeah, it depends. So someone asked the question, is there a time of the day when we can just execute without waiting for a retest? That's very subjective because we don't know if there's going to be a retest. We don't know whether price is going to continue moving up or not. But what we do know is that based on experience. Now, if I look at, let's say, GPJPY, if I look at GPJPY, I have seen that pair for 3 years, every day, every morning, and I know for a fact that sometimes when it breaks out of a, let's say, resistance, sometimes it may not do a retest. So I might enter knowing that it won't do a retest. That came from me watching it over and over again. Someone who's new, please don't take this as a sound advice to take a trade. You need to choose your pair and you need to watch how it moves. If you don't watch how it moves and you start taking trades like a cowboy, it's not going to work at all. Trust me, I've been down that path. I've seen people go down that path. I've experienced a lot of dark memories from trading and it doesn't work. Should we always wait for a minor support resistance to be formed? We're going to talk about that. When analyzing on lower time frames and putting zones, aren't you scared that you will trade against the higher time frame bias? We're going to talk about that. So we're going to talk about all of that. So again, I'm not sure if everyone's listening or audio cuts out when I say that all questions are going to be answered. They will be answered without you asking, obviously. So this is a concept, the apartment complex concept, right? This is used best to describe your support resistance. Someone asked, is the support resistance the same as supply demand? Yes, supply demand, from what I see and believe, is supply demand was created based on like stocks, futures, equities. Like when you had trading of like grain and corn and soybeans. That's where the word supply demand came from. When you're looking at currencies, you're looking at support resistances and zones and stuff like that. So they're basically the same thing. There's actually not much of a difference at all. So for simplicity purposes, I just look at them as the same thing. So apartment complex. Let's say you have an apartment complex right over here. And let's say this is your apartment right here, right? In this apartment, you have different levels. So you have one level up over here. You have another level down over here. And then you have a second level. And then you have a second level over here. And then you have a third level. And then you have a third level over here. And then you have another level, and then you have another. So a level you have in the middle, this is the middle level you have right over here, right? So now for simplicity purposes, let's say this is your roof. This is your roof, which is your weekly time frame, right? And then this is your floor, which is also your support, and this is the weekly time frame. And then you have your daily over here, and then you have your daily right over here. Then you have your 4 hour, you have your 1 hour, you have your 1 hour, and then you have the 30-minute, and then you have the 30-minute over here. Right? Perfect. So these are like your support resistance line. This is the easiest way to manage support resistance here, right? So let's say you have a ball in the middle of this apartment complex, and let's say this ball is bouncing up and down, right? So let's say once this ball bounces and breaks above the roof on the 30-minute, right? If it breaks up, there's a very high probability that it might continue going up, right? So if it breaks above this resistance, it's going to continue on to the next resistance, and then it will start bouncing up and down. Now, since it moved to a higher resistance, it's going to need a lot of force to break above this higher resistance. So let's say if it breaks above here, you know that the next place where the ball is going to go is probably going to go to the next one, the 4-hour one. And then it's going to start bouncing in the 4-hour resistance up and down, up and down. And if there's enough volume in the ball, it might, break down the floor and come down to the lower time frame, start ranging. And once it breaks above the 4-hour, goes up. And if there's volume, it might break up into the daily floor here too, right? Now it's bouncing into the daily floor. So as it starts moving up a level, you will notice that the ceilings of this apartment complex, they become tougher to break. A time comes when it comes towards the roof here, and when it starts to break above the roof, the security guard comes, they're like, oh no man, you can't come on the roof, you can't play on the roof right now, son, so you got to go back down. So then the ball says, okay, well, since this is a very, very strong zone over here, I might want to reject this zone and go back down to the lower zone right over here. Now it starts bouncing down. So subsequently, if price breaks below the floor, goes down to the next floor, the support is going to be the 1-hour one, right? So you get the idea how price moves between support resistances. It's like floors and ceilings. If the floor gets weaker, it's going to break down to the next floor. So now when price is bouncing between these floors, you have the most recent resistance marked and you have the most recent support marked down over here. So if it breaks the support, the next support for to go to is down here, and it's going to keep on bouncing, right? And if it comes down to the basement, again, the security guard comes and they're like, oh, son, what you doing in the basement, son? You got to go back up. And you realize that this is the weekly time frame, and this is very, very strong. So you just go back up the room, and you're like, okay, let's just keep bouncing up over here. So this is how price moves between supports and resistances. This is really, really important. Whenever you have price and you have the most recent support and resistances drawn, we're going to go over a lot of examples here soon. So whenever you have support resistances drawn, you know that if we break above a support, if we break below a support, where's the next area that we're going to go, right? If we break above a resistance, where's the next area where we're going to go? So this is really important to understand. All right, let's just remove all this and let's go towards, I hope my pace is not too fast, not too slow, it's okay. All the questions are going to be answered as we go along. All right, let's see here, let's move towards